So I love learning from every single trader that has made it. More than that, I love it when traders get together. Like, I'm very proud to host an annual conference. And when we do this, all my top students come together. A lot of them present their findings, their ups, their downs, their successes, their mistakes. We do some roundtables. So in this video, this is a roundtable with several of my Millionaire students, hosted by Tim Bowen, another one of my students turned teachers. We have a great community where it's not just about money, it's not just about education, it's really paying it forward. So when you watch this, listen to these students' answers. Their success is built, has been built on the backs of other successful students. Okay, I'm not just a one-man band anymore. It's beautiful that my other students are helping me mentor. If you click the link below, you can apply for my challenge. This is where me, Jack, who you'll see, he's giving weekly webinars. He's doing weekly watch lists too. I'm doing my weekly webinars. I'm doing daily watch lists. But the challenge is where all of these millionaires are created. So pay attention, listen to their answers, take notes, get inspired. You can do this. Anybody can do this. It doesn't matter your background, but you have to be dedicated. You have to really prioritize your education. It's not about hot picks. It's not about hot trends. It's your preparation and your homework. So watch this roundtable and take notes.
If you're struggling to actually sell at the areas that you want to sell at, that you want to start taking profits at, start off by trying to sell one share, right, of your stock. And you know, if you take a loss, let's say of 100 shares, and you take a loss on the next 99 shares, and you're doing that 3, 4, 5 times in a row, you probably should be selling more of your position the first time. But by just at least starting to sell once, I think it makes it a lot easier to be comfortable with selling a little bit more from there. Because it gets really frustrating taking a very small win and watching the rest just come crashing and burning down.
Yeah, I'd say when it comes to following a trade plan, you shouldn't be in a trade, period, without a trade plan.
Fair enough.
There's no question about that. And for me, like the question I get asked all the time is like, how high is the stock going to go? How'd you know it was going to go that high? And the answer is I didn't, right? When I make my trade plan, obviously I have a setup and it's like a certain checklist of criteria that I'm looking for, say, a breakout trade. But the only thing that I can control is the risk on that. So when the biggest part of my trade plan is, you know, make sure that risk is there, and you better cut that loss. That was him. That wasn't me. I promise. When that risk level is hit, the most important thing is just to cut it, right? I know dealing with like a small account, say under the pattern day trader rule, it can be super annoying because you're like, well, I just cut that, and then maybe the trade comes back and works. And unfortunately, like that's something you got to deal with. You got to learn to follow that plan and learn the fundamentals, do that correctly. Because eventually, when you're out of that pattern day trader level, what happens is if you cut the loss, and then the trade starts working again, just get back into it. And that happens to me all the time. I'm sure everybody on this stage would say the exact same thing. Sometimes you just enter a trade, you think it's going to work, you're just too early. You get out with a small loss, and then try 2, maybe even try 3. That trade actually works. And using good risk management, your gains should more than cover those small losses.
It happened to me last week. Sold early, and it had 30 minutes later it happened. It worked. But yeah, for me, when it comes to really following through on my trade plan, it comes down to a level of like conviction and confidence in terms of familiarity with a setup or a trade you're taking. Like if and this happened to me all the time as a beginner, and will still happen to me now, almost 7 or almost 8 years in. If I'm unfamiliar with what I'm actually trading and what I mentally think is going to happen within the realm of possibilities of the stock I'm trading, I get very uncomfortable. Why? Because I don't have any clue what's going to happen, right? I could trade Apple today, but I have no idea where Apple's going to go. Versus if I'm trading a panic dip buy or a first red day setup, I have a very familiar mental framework of how that stock should move, when it should move, why it should move. And when that happens, it's very easy for me to follow my trade plan then. Like I know, okay, this is around the time that this stock should move in this way. Okay, this is the first time roughly in the day I take profits. Oh, this move just happened. That's like the final move of the setup. I should be exiting, right? I have a general framework in my head of how it should go versus, again, if I just trade the SP 500 today, I have no idea what's going to happen. Like what are we down 1%? Are we still bleeding?
It was a rough day.
Rough day today. I had no idea. I just didn't know. I wouldn't know. So.
Yeah, I couldn't agree more with Kyle. Kyle pretty much summed it up there perfectly. And that is the main issue that I have sometimes when I get away from my strategy and my data that has proven to me how I should execute my trades. And if you're just trading some random setup, which I'm sure a majority of you guys are in here just trading random stuff, right? What's your data? What are you guys doing? And it's not even about the trading plan. It's about the data and the executions and the patterns. And if you don't have those and you don't have that conviction, you're never going to execute a trade plan correctly. And if you do end up buying it and selling it near the top, it's probably just luck.
Yeah, and I agree too with what Jack just said. I mean, we all have a different process, but when you're first starting out, you don't really know exactly what you're doing. So there's just so many knowledge that's coming to you. But the only way that you'll truly find out what really works for you is just by knowing your personality and just starting to repeat the process over and over and over again, and then eventually it's all going to come together. But it won't happen in the first few trades that you take. It's going to take a lot of trades, maybe 200, 500, who knows? Everybody's different, but it's all going to be a different process, and it will not happen overnight. So it's all a repeated process.
Give me a question over here. Somebody raise their hand. One suggestion I make to a lot of people is write it down. Like if you find yourself, I'm buying at 2 and I'm stopping at 180 and you're still in at 170, write it down. Like write it down and say, I will stop here. I will take profits here. And I think that that was one thing that really worked for me, where when the stop starts slipping, I'd put an index card in the function keys of my keyboard, and I'd just feel like a real asshole if I was still in that trade when I said I wouldn't be in it. So I think that's a good repetition builder.
All right, got a question over here.
So when you are starting to find consistency, how did you make that jump over the fence to the other side and never look back?
For me and my process, it was after I took 1,000 trades in the same year, and after I practiced over and over and over again, where I knew a strategy, and it was just one strategy, the panic dip buy, like the back palm of my hand. So I knew that it was time to size up only when I had practiced so many times, and that's when I knew that, I could exponentially grow that strategy. But that was only after I took tons and tons of trades, and I just knew exactly how it traded, and that's when I really was able to exponentially grow that strategy.
When you have found consistent profitability and you know what you're doing to find that consistent profitability, you'll be able to execute that over and over again. And sure, the market conditions might change, and that strategy that you found profitability with, it could evaporate tomorrow, and you could not see that strategy for another 1-2 years. But you have built the blocks of discipline and data and time spent on a strategy, and you've learned how to find a consistent, profitable strategy. Maybe for a lot of you in here, you learned how to trade OTCs, and OTCs are gone. So you still have those same skills to learn a new strategy, and it's just about using those same skills and finding the best patterns in the market and executing that strategy over and over again, about that process, about how you became profitable.
Yeah, in terms of the saying, never looking back, I would give an answer of I'm always looking back. Right. I'm always looking behind my shoulder. And I agree with these guys. There is a level of comfortability you find in a strategy or a setup that works for you most of the time, totally. But I've lived through setups that don't work anymore. I've lived through seen other traders who have setups who don't work anymore, and they have to go get a job, or they thought I had a setup that worked, and they end up blowing up and losing 90% of their profits after being consistent for 3 years straight. It is really, I don't want to sound scary, but if you get too comfortable, the market will remind you. So there is really, in many ways, it's always a looking back. It's always refining. It's always making sure your strategy is working. And if it's not, you find out why, because as soon as you can, the sooner you can adapt.
Yeah, great answers from those three. Trading, it's an abusive mistress, right? And it really is. If you get lazy and complacent, eventually strategies do go in and out of style. Sometimes, maybe just for a month or two. There are strategies like Tim Grittani. Tim Grittani made, a large portion of his first million with OTC promotions, and those are gone. those don't exist anymore. They haven't really existed since like 2016, right? So that was a great strategy at the time, but it doesn't work anymore. So the constant of just, once you have your building blocks and stuff, you do have a good foundation, and it does allow you to be a little more agile and learn new strategies. But that day in and day out of refining the process, always going and making your watch list, saying like reviewing your trades, and it's not something you necessarily have to do every day, but at the very least, I'd say weekly, but you could do it once a month, just going back and reviewing those trades and being like, look, this breakout stopped working for me. Like maybe breakouts either stopped working or you're doing something wrong, and it's that cycle of just constantly refining and just you got to stay on top of it, otherwise it's going to chew you up and spit you out.
Raise your hand if you've gone on a winning streak only to have it like all wiped out in one trade. All right, there we go. Yeah. It's as they all just kind of said here too, setups come and go. And when you find yourself getting really comfortable with one setup and then it kind of stops working, I think a lot of times we like to stay either oversized or we almost revenge trade a little bit. And I think one of the best things you can do to kind of get over that hump, I remember when I was finding consistency, was I had one large loss that wiped out like 2 weeks worth of gains, and it finally just kind of hit with me, saying I can't keep doing this. It's happening time and time again. And for me, sizing down really helped me realize that the patterns that I was trading were working. I was just getting too aggressive on one that didn't work. And whatever that reason is for anyone or for myself is completely up to you. But I think to help get over that hump, recognizing that your setups are going to change a little bit and it's going to take time to either learn a new one, add a new one, do that with a little bit smaller size. And I think for me, that really helped me get over the next hump and then allowed me to start scaling that way.
I think the common thread takeaway I get from that is like just understand that Steve Jobs always recommended a book, Zen Mind, Beginner's Mind. Like understand, like everything I hear, the common thread is like you're just never done. Like if you ever think you're get to the point where I figured it out, look out. Because it's probably that big loss is taken, so you're coming. So just always understand that it's just simply part of being a consistently profitable trader is you're never done. It's always constantly refining.
Yeah, how do you, I guess, differentiate, like if you're in a stock and it hits your levels, like the support level or something like that, it goes a little bit below or a little bit way below, and you stop yourself out or exit the trade. And how would you differentiate if you get back in with that versus revenge trading? I mean, because you hear a lot about that too. Why'd you get back in the trade? Well, you was revenge trading. So, I just kind of wondering, is there a difference between that? Like if you get out because you hit your stop, and you got back in because you seen a better level?
So I'm assuming you're kind of asking, is there, as soon as you get stopped out, if you find yourself re-entering, how do you differentiate between knowing when to get back in and, classifying it as a revenge trade? That's where I stand by. I think it's really important to have as much criteria as you can for the stock you're trading. And that's going to change over time. You're going to get more criteria that you need to see out of that stock. And what I find is that oftentimes, if I'm getting right back into a stock after getting stopped out, there is a pretty good chance it did not reset up with all of the criteria that I need in that time frame. And so if I find myself entering a trade where only one of 5 criteria has been hit, it's probably a revenge trade. And that's going to take time for you to kind of make that differentiation for yourself, but make sure that you have a few variables, a few pieces of criteria before you enter any trade. And that will, in my opinion, help a lot with making sure you don't revenge trade, you're not over trading just because you just took a loss.
Yeah, I'd say keep track of your emotions or even how you're feeling when you're trading. And that's something I definitely did a lot in the beginning when I was journaling. Like if I woke up and I was hungover, right, or was super tired, and take note of that. Did you lose on that day? Okay, so probably don't do that again. Or when you're feeling that emotion again, don't make that same mistake. Or a lot of revenge trades, it's emotional decisions is pretty much my answer. Like if you're in that trade again and you're just walk through your process, it hits your checklist, it's a plan, and you're just not emotional about it, and go out there and do it. We're all humans, but trading at the end of the day, if you can be as robotic as possible following your process, it's definitely gonna go a long way.
Yeah, I think revenge trading comes down to the emotions behind it.
Right.
So if you're entering back into a trade because you want to make your money back, well, that's not the setup, right? That's you revenging, just trading the money. You're trading your P&L at that point. You're not trading the setup. But yes, there are some cases where maybe you will get stopped out and the setup comes back and actually starts giving you everything you need to re-enter. In that case, that's okay, and that's totally fine doing so. Just be wary of having that happen too many times. For example, like I'll be able to emotionally separate myself from revenge trading. Like I don't usually have a problem revenge trading. However, I have a problem being willing to give a setup multiple tries because it keeps setting up for itself. There's some times where I'll be in a trade where it just keeps on setting up, but I keep on stopping out. And so for me, I have a rule that I give myself a warning at 3 tries, and at 5 tries, I stop. Because I've had times where I'll go 8, 9, 10, and before you know it, I've just chopped myself up all day. And I've never been emotional about it. Like I've not been like, oh, I need to make my money back. I'm just trying to trade, and it's disastrously losing every time, right? So yeah.
I don't know if I believe this guy 10 times in one day and he's not being emotional. Yeah, for me, my answer is going to be a little bit different. The main thing that I take into consideration is time of day, right? And I like to give my trades, sometimes my risk necessarily isn't even a key level on the chart. It's more of I have an idea of where I want to risk off of, and if it breaks at a certain time of the day, and then I'll kind of always let it go through if it's a short, or let it go down if it's a long, through the level I wanted to risk off of, or where my size of how much I want to risk is based off of. But then I need to see it attempt to come back or attempt to come down towards, like, I want to see it attempt. And if it attempts not to continue its trend that I thought it would do, and it fails again and fails again, then I'm willing to cut my loss because clearly my trade plan is wrong. And I'd rather just take one big loss and know that I'm wrong versus continue to trade over and over and over again. But it's not really advice that I would give for beginners. Like it's just not something, because you don't know to differentiate, how much time you should really give it. And then you end up taking a much bigger loss than you anticipate. So, and sometimes it's just a partial cut for me. I'll take a partial cut when I don't like the trade anymore, or I think it's going to crack, and then maybe I give a little bit of it. But it's all in the moment. It's all what happened the last week. What patterns are working? Should this still work? What time of day is it? What is the volume? What is all these little things go into my plan and into my trades, and it's very hard to explain. But if you give me like a specific example, I'll take it and run with it, and I'll know what to do for my risk management profile. Whereas I'm a little bit less robotic than Kyle in a sense, where he's just like, okay, I'm cutting it here. I'll get back in and I'll risk this level now, and I'll cut it here, whatever it is. So it's also a lot in the level 2 in the tape. Like how is the tape looking? Is it looking like they're shaking out? Is it a trappy stock? Has it, did it shake out before it ripped up? So all these little things go into my mind when I'm deciding where to stop out, and I also know in the back of my head, like, if the time of day is correct and I stopped out, I shouldn't even get back in, because my plan isn't in this time period anymore. If I'm getting back in, if I stop out on a trade in after hours because it's gapping down, why would I get back in? Because it's already gapping down. It's not the right time period. So a lot of stuff there to kind of digest, but it's a lot of things that go into my head when I'm determining where to stop out in revenge trading.
For me, I feel like it has a lot to do with how comfortable I am with the setup. If it's something that I've done over and over and over again, and I know exactly how I'm trading it, then maybe I would give it a lot more chance to kind of like prove itself. But if it's something that I'm just trying out for the first time, then maybe I'm just not going to try it as many times as I would. But it all depends on how comfortable it is and how well I know the setup. But also, revenge trading, it's very easy to kind of like get into that habit. So just making a rule for yourself. I agree with Kyle a lot on this. I just give myself like a 3 to 5 as well, and then just give myself some time in between each loss, because if I just cut, then odds are I should probably not get back in if I just cut. So just give it some time, and maybe journal and just take some time and just kind of like digest the loss, and then you can try again if you can create a new plan and you know your exact risk.
So great stuff and from advanced traders. One thing I would say, I think, I mostly work with newer traders. I think when you're new, all retrading is revenge trading. You are incapable, and you may hate me for this, you're incapable of being able to remove yourself from that trade, from that stock that day. These guys have years of experience doing it. They're not emotional. They've been there before. I tell you, my opinion is back to that 0 to 1 trades a day. If you're new and struggling, which is probably why you're here, all re-entering is revenge trading. You should not do it. You were wrong. You need to learn how to be okay with being wrong. Wrong is not bad. I was wrong today. Hopefully tomorrow I won't be wrong.
All right, got the next question back here.
Yep.
Hi, when deciding to enter a trade, how much do you weight scanner criteria and technical analysis versus, say, macroeconomic environment or policy?
Well, I don't really look into that too much. I don't really even look at fundamentals that much. All I'm just looking for is for the top percent gainers, since my strategy is, looking for the top percent gainers, so that's all I'm looking at. But I don't really take into consideration any of the other stuff. I'm just looking at key levels and all technical analysis and how I read the chart. And I also don't really use a lot of technical indicators as well. I kind of try to keep it as simple as possible and just look at what's gapping up, and that's the one that I'm going to base it off of. Or, for the breakouts or any long trades, then you also have from the days prior that you're looking at. So just looking at your watch list and keeping it as simple as possible.
Yeah, for me, I like to create the story in my head, right? And it's just another very advanced technique that really not a lot of you beginners should really be considering too much. I like Bowen's point in terms of just not revenge trading, but for me, it's always thinking about the psychology of the trade. So who's winning this week? Who's been winning this month? Who's losing? What's the volume? What's the volume like? And those are sometimes way more of an indication. Like with OTCs, you can get away with just technicals, and that's why you see so many traders profitable in OTCs, because it's the easiest trade. But as you do small caps and low floats, and as you're doing mid caps and even large caps and blue chips, it gets more advanced and advanced and advanced, and you really have to be considering the supply and demand, and that's really the only thing that matters. But one thing that I will say is, in a bear market like today or yesterday, I'm not looking to buy stocks, really. I find that for whatever reason, I still see breakouts work in bear markets sometimes, but for me, I have no edge. Whenever I buy a stock and the market's red 1 or 2%, it's an instant loss for me, just because there's a lack of liquidity on the breakouts, and they're very crappy. And one statistics that I will share is, if the market is red and a stock starts to unwind, or a stock starts to fall apart, it's going to come in 50 to 100 times faster than it would if the market was strong, just because of that fear in the market. And that's why, because when people start seeing stocks going the other way and the market is red, there's just so much more fear in the market. And that's why you see stocks tank a lot more in bear markets. And it's the same thing in the inverse, and that's why there's a lot of short traps when the market's super strong. If a support level breaks, you'll see reclaims happen way more often. You'll see dip buys get bought up, because the shorts are the ones who are getting screwed. So it's all these psychological things that you really need to be considering. And my trading's just so much more. It's everything. It's the fundamentals. It's the technicals. It's the psychology. It's the environment. It's everything.
I think the overall environment, if it's an extreme case, I'll specifically remember during the pandemic when the overall indices were collapsing, because just people were so unfamiliar with what was going on, that really made an impact on small caps. So if there's already any pinnacle moment like that where all eyes are on the overall indexes, then sure, I'll take a look. But most days I don't really care what the larger macro is doing per se. And I think the beauty of that is because if we do trade small caps, if you do trade penny stocks, 99% of people who are trading the same ticker as you are just look at that ticker as a vehicle. They don't know the name of the company. They don't know what they do. They don't know who the CEO is. I couldn't tell you 99% of the names of companies I've traded. I only know the ticker. And that's what all it is for me, is a vehicle. And so for me, it's 90% technical. Yeah, some of those fundamentals of the stock come into play, which are important. But if the chart and the price action don't line up with what I'm seeing, then that's what's most important and what I care about most.
I'm going to go a different way with this one. I think that the conditions we're in right now, the overall S&P 500, I think does have some impact. Jack mentioned we're more or less, now we're not in a bear market, but especially the last couple of weeks, we've been pulling back pretty hard with all the stuff going on overseas. And when I make my watch list, something I always just take note of is where we are with the S&P 500. If we see the S&P 500 down about 1% or more on the day, it really does suck up liquidity across the board in penny stocks, a lot less runners. And when they do run, it's usually quicker trades. And that's usually when I say something like, it's time to pump the brakes a little bit. Be quicker with the trades, maybe even take smaller size. Versus you'll see it, even if you go back 2 weeks ago, when the S&P 500 caught support at, I think it's 415, and we had like 2 or 3 days of bouncing, sure enough, that's when TPST ran, and all these other trades started really taking off. So it's not the biggest factor. It's more of like, I'll take the trade if it's a great setup. It's just, am I going to pump the brakes a little bit and use some smaller size, be in and out quicker, or push the pedals to the metal and try to let that trade run?
Well said. Yeah, I think that kind of sums it up pretty well there. The overall macro conditions of a market isn't something I'm looking at day to day to decide if I'm making an entry. However, I still want to have a good read on what's going on across the market, why the market's falling right now with everything going on overseas, like Matt said. In a case like that, I don't want to be overly exposed on the long side. So instead of deciding, okay, is this going to affect my entry? It might mean I'm not going to be as aggressive on long trades as a whole for the foreseeable future until that market does start to reverse. And if we get that, then I can start being a little bit more aggressive. But from a trade to trade standpoint, for me, I'm not looking at macro events. I'm just trying to use that as a way to kind of gauge overall sentiment and decide whether or not I want to be holding for a while or scalping that trade really fast.
Yeah, so I'd like to know how you all, first thing in the morning, build your watch lists. What are the keys to building the watch list? Where does the data come from? What makes you decide which one of the 59 million shares and stocks that you're going to focus on today? I want to hear all of you tell me that. And if the list comes strictly from one source, say it. If it doesn't, tell me how you build your list and why. Have a nice day.
Yeah, so for me personally, that's a great question. And I've shifted a lot from making my watch list in the morning to now actually waiting till the end of the day to make a watch list for the following day. And that's really just because in this market, again, I'm not seeing as much follow through towards the end of the day as I have in previous markets. And so I like to see the ones, if I'm building a watch list, it's really for a multi-day runner, right? If there's a stock that's gapping up, I'm not going to know that until the day of, and I want to really wait and see how that stock opens. That's not to say I won't trade it. I might still make a game plan on the strongest day one gapper if that setup does come around. But I generally wait until the end of the day, and if we have a stock that closed really strong or a stock that I've been watching that's holding up near a key level, or maybe even holding down near a support level where I expect a bounce, that's what's going to make its way onto my watch list. So generally just stocks that are really holding up well, holding a key level well, or that are just starting to form a setup or pattern that I'm trading in the market. And, at this point too, setup. What's that? So I just use the top percent gainers list on stocks to trade, and I'm looking at the ones that are closing up the strongest at the end of the day. And that doesn't always mean that the top stock on that list is necessarily going to make its way onto my watch list either. I'm looking for ones that are closing near their highs if I'm looking at a day one gapper.
Yeah, my answer pretty similar to Bryce's. My watch list for the morning, I make the night before. And how I find those stocks, usually it's just a top percent gain scan. And then from there, I just flip through them. And if it's strong throughout the day, then it's going to be a plan that I then develop for the next day. There's no secret source for the top percent gainers. If there is, someone let me know. But what I made a joke back there when we were building our scanner, and someone asked me, like, how do you find stocks that, you know, have a good catalyst or breaking news? And I said, there's 500 people in this room. Someone's going to find it for me. And that's the truth. That's the benefit of a community. Like, most times I'm not going to find the reason a stock's running. But when you have a good community and a great chat room, all of which Sykes has, that's usually how I find these stocks, whether it's Twitter or a chat room or just a top percent gainer. That's really the benefit.
Same here. I will make my watch list the night before, mainly because I would say 95 to 99% of the time I will be, if I do take a trade, it's going to be a stock that is on my watch list the night before. I rarely find new stocks. And in terms of how I scan, yeah, it's big percent gainers. It's on stock to trade, 10% or above. And 10% above just to narrow it down from going to, say, 60,000 stocks to maybe the top 500 for the day. But then from there, just because, like Bryce said, just because it's up, say, 100% of the day doesn't necessarily mean it's on my watch list. I'm now looking into the intraday chart, I'm looking at the daily chart, and I'm looking for a pattern that I recognize. So for me, I love short selling first red days. And a first red day is a setup, not necessarily the first day it is red, but the first day that it's really going to have a nice sell-off after being up 1, 2, 3, 4 or 5 days in a row and being up 100, 200, 300% in a row. Those are the first things. So I'm looking at for daily charts. What daily charts are up 3 days in a row? What daily charts are up over 100% over the last 3 days, kind of thing. And if a chart looks like that, perfect. Goes to my watch list looking for a first red day tomorrow. So yeah.
Yeah, for me, I'll tell you guys the truth. I haven't used a top percent gainer in 4 years. I haven't fired up a scanner in 4 years. And the process that I go about making my watch list is I have friends for every strategy, right? Mari trades gapping craps, and I have other friends that trade gapping craps. Kyle trades first red days. Matt Monaco hit me up when the SPY's ripping and looking for long ideas. Don't talk to Bryce. And I have all these friends for different strategies, and I've never, when I was in high school or when I was in any type of school, I never did my homework. Just let the other people give me the answers, right? And when I do, no, this is completely serious.
That's why it's funny. You're not joking.
When I do, when I do go look for stocks, I take a loss every time, right? Because you're looking for something that's not there. If there's something that's worth trading, somebody's going to bring it to my attention. I've never really missed a stock because I haven't known that it was a play. I've missed it because I misexecuted, or like today with ABVC, like I just was sleeping and I missed it. But that's how I go about it, and there is no, like, and that's a question that I get like a lot of time. I don't know how many times like I've gotten that question, which is, you know, how do I find my stocks? How do I, you know, I don't read the news really. I just look at the filings on dilutional tracker, which also makes it really easy. So yeah, that's kind of how I go about it, and it's all about the execution and the actual trading for me, which is the difference maker.
Yeah, I pretty much do the same thing, just top percent gainers, stocks to trade. There's some on FinViz, they got some on Thinkorswim. So just looking at the top percent gainers, and then I'm just basing my trades off of that. And also previous knowledge of like the ones that have been running throughout the week. And then I'll build my watch list based on what's running throughout the week and what's gapping up in the morning.
So one common thread is you'll notice they're all looking for multi-day runners, whether that be long or short. So the way I teach that is you use what's called the rolling watch list methodology. So you got a watch list for Monday, Tuesday, Wednesday, Thursday. And every day, you'll notice a common thread. They all said stocks that are closing strong at the high of the day, all day moves, multi-day moves. So if you've got that, today's Thursday, you've got a stock that was on your Thursday watch list because you rolled it over, that gets moved over to Friday. You go back to Wednesday, you go back to Tuesday. So you're always rolling over these stocks that are continuing to push the highs, that are maintaining their gains, that are holding that volume. And you'll see most of the time there's like 3, 4, or 5 of these that just keep rolling over. Those are the ones that explode on like a day 3 surge type idea, or you get the first red day and they absolutely eat shit because they've been up for 10 days straight. So that I think is a great tool for you to kind of keep these on your radar. And that's the one common thread. They're all looking for multi-day runners. Day one runners are easy, just a simple percent gainer scan. So.
All right, we got time for one more.
Yep.
Hello, this question's more for Kyle, but everybody else can feel free to chime in. 21 lessons from 6 Millionaire Traders. That video you said, your first year, don't focus on making money, focus on surviving. Took me a while to accept that, but I'm at that point now. What was, when that year surpassed, what was your trigger? What made you feel like, okay, I can take the next step? Was it identifying certain patterns, seeing them play out, as Jax talks about all the time, seeing the screen time, seeing that play out all the time? Was there one particular indicator to you that after that year and after soaking in the knowledge for that year, what made you feel like you could take the next step to become profitable?
Yeah, to build off some context of what he's referring to is I've been known to say, your first year of trading should not be looking to make money, but to simply survive.
Yep.
Because 90% of traders will not.
Yep.
And so if you can just survive your learning curve in the first year, you leave the window open for you to receive and learn so much more than someone who lost all their chips, right? If you were out of money, you're done. Like you don't come back unless you refund. And I don't think anyone here wants to refund 3, 4, 5, 6, 7, 8 times. Some of you might have, right? So just surviving. And the way I say that is because if you can get through the learning curve, you give yourself that much more chance to be profitable, which then gets you into the moment of, okay, I've learned for a full year. Maybe it's even longer than that. I have enough information now at this point to start looking for windows of opportunity in terms of, okay, well, how am I actually going to get, call this count off the ground and start making money? And so for me, I survived because it's very similar to what Bryce was doing. What you risked like $1 per trade, right? Yeah, $2. So he was going to survive. That guy wasn't losing a thing, right? For me, I just took 100 share position sizes. So that kept me alive. But once I kind of started gathering enough information, I said, okay, well, where and when and how and why would I actually be in a situation where I could take more than that? And that got me to leading to have to find a setup, right? Something that is repeatable, something that can happen over and over and over again, that's on multiple different stocks. And for me, it was finding the panic dip buying. And unfortunately, panic dip buys are not really around anymore. They're one of those setups that have come and gone over the years. But for me, it was the first thing I found that, my first dip buy that I made money on was Fannie Mae. It dropped from like 3 or 4 down to 150 or something crazy, and then bounced from 150 to 250. And it happened on Fannie Mae. It's happened on thousands of other tickers since then, so it's repeatable. What's up? CYDY. Name any ticker during the 2020.
That's my favorite, though.
CYDY was Matt's favorite, yeah. I think it was everyone's favorite. But it's repeatable, right? And it's not the panic dip buy, it's a certain breakout that's repeatable. For me, at this point, my favorite is a first red day that's repeatable. Something that's going to be able to consistently, not every time, but most times, give you the best odds of bringing money into your account, because then you go from surviving to actually making money and slowly building up from there. Building from the ground up, literally, so.
All right, guys, this light's been flashing at me, so let's give them a round of applause. Thank you, guys.
How useful was this? I mean, this is crazy where these self-made millionaires are sharing everything they've learned with their trading. And this is what I want for you. I want you to understand that this can happen to you. These are just average people. None of my millionaire students, now 30 plus millionaire students, we're not math geniuses. We're not like overly intelligent. We're just hard workers and we're open to learning. So I hope that this video has been useful. Click around. I got a whole bunch of other videos from patterns that I've learned, trades that I've done, other millionaire students that I've created. The more you study, the more you prepare, the better your odds of success. You should invest in your education. If you click the link below, you can apply for my challenge. If you click more links below, you can study guides. You can use new tools. We're now getting into AI to help that really, take our trading to the next level and our research to the next level. I don't know what to say to you if you don't understand that you can do this, but if you start seeing more and more of my millionaire students, guess what? That can be you if you take this seriously. If you follow my instructions, and like I said, all of my Millionaire students come from my challenge. I love the challenge. The challenge has its own special chat room where you can see what these Millionaire traders are doing every single day with trade alerts, with commentary, with Q&A. I just love it. I'm so proud of everybody. Please thank my Millionaire students for being so forthcoming with their journeys. Click some links below, follow instructions, and let's see what you got.